transparency triumph. Use existing systems to enhance operational awareness, track progress, and manage sustainability. My name is Marissa Bichuk, and I am an Associate Consultant and Marketing Manager for Brown Flynn, a corporate responsibility and sustainability consulting firm based in Cleveland, Ohio. Today, our moderator will be Mike Wallace, Managing Director for Brown Flynn, and our panelists will be Evan Harvey, Director of Corporate Responsibility for Nasdaq, Tim Hopper, Responsible Sourcing Manager for Microsoft, and Steve Lipman, Director of Corporate Citizenship for Microsoft. While everyone is getting settled and logging on to the webinar, I will go over some logistics. So first, registrant phone lines are in listen-only mode during the presentation. So at any time during the presentation, you are welcome to ask questions by typing them into the question box, and we will address them at the end of the webinar during the Q&A session. If you have a question directed to a specific person, just make sure that you write their name in with the question so we know who to direct it to. And also, if you are experiencing any technical difficulties at any time during the webinar, please call either of the numbers on your screen. So with that, I will pass it over to Evan Harvey, Director of Corporate Responsibility for Nasdaq. Evan?
Thanks, Marissa. It's a pleasure to be here. My name is Evan Harvey. I'm the Director of Corporate Responsibility at Nasdaq. We're pleased to host this webinar for you and to bring you some of the latest trends in this area. I know that a large number of Nasdaq-listed companies are on the call, and we're very happy to have you join us. Hopefully this will be one in a series of events and calls where we can focus on sustainable aspects of business strategy and how best to share practices with companies that are doing this well. We're very pleased to have Microsoft here to be the kickoff for this because I think they're doing a wonderful job. Nasdaq is involved in this for a couple of reasons. One is just our own culture. Technology culture is creative and innovative. We always treated our sustainability mission as having two parts, the efficiency side and the transparency side. So not only doing a better job with tracking, measuring, and performing on certain resource and energy targets, but also reporting that information publicly and trying to lead as an example for listed companies. Our own effort has been underway for about 4 years. It was very consciously designed to be something that could be emulated cheaply and quickly at other companies. And so far I think that we've had a pretty good story to tell, and I think that the interesting developments in our involvement have to do more with, less to do with what we do as a public company, and more to do with the outreach to our issuers and the outreach to other stock exchanges, which we'll talk about a little bit later. But it's a very exciting time to be in this field because the stock exchanges around the world are starting to reach consensus on the kinds of environmental, social, and governance metrics that we find to be material to the business, material to a continued listing, and material to a sustainable capital formation and eliminating or downplaying some of the short-termism that we have in the market. So I think that there's a strong argument to be made for all of those things. There are two parallel efforts involved here with us globally. There's the World Federation of Exchanges Sustainability Working Group, and that has about 1/3 of all the stock exchanges in the world actively collaborating on a guidance document of some kind for companies to use. And then there's also a concurrent effort at the United Nations called the Sustainable Stock Exchange Initiative, which has been around a little bit longer and has a more philosophical goal in mind, and that is mostly the support of the UN Millennium Development Goals and the Sustainable Development Goals. And you can read more about that. But it is, in both of these groups, a unique partnership between business and NGOs and or advocates in the space to make businesses more transparent, to drive best practices into businesses, and to find practical solutions that don't impact negatively on your operation, but is to make your operation more efficient and to deliver, hopefully, more efficiency, which we think is a positive, a net positive. I am happy to have Mike Wallace here on the call today from Brown Flynn. Mike and I have been friends for a while. I know him from GRI. He has a tremendous amount of experience in the space, and Mike is going to walk us through a bit of an overview of the environment right now, and then I'll come back for a bit of a Q&A with Mike. Mike?
Great. Thanks, Evan. Thanks for the introduction and the overview of what's going on. I'm going to be asking Marissa to flip some slides to help us along here. I want to let you know also that you all have access and can directly email me through the chat feature. So if you have questions through this, please feel free. Marissa, if you go to the next slide, as you would certainly know because of the work that we're all in and that we're interested in, at least most of you that are on this call, there is a growing number of stakeholders that are interested in this topic of sustainability. It's happening not only all across the world, but in every part of the economy. And as this demand for transparency on sustainability performance increases, it's not going to only affect publicly traded companies, it's also affecting privately held companies. And we here at Brown Flynn, as Evan mentioned and Marissa mentioned, are corporate responsibility consultants, and as such, we're dealing with public and private companies and helping them understand kind of the lay of the land out there and what's going on. So put together a few slides to give you a sense of how these trends are playing out in the marketplace. And you can think of these in a couple of different ways. Can this type of information help you build your own business case internally? Can it help you with your engagement with suppliers? Can it help you with your engagement with investors? Or help you with your dialogue with your CFO and your investor relations officer? So think of the various dimensions that relate to this. You can flip to the next slide, Marissa. One thing that's certainly driving a lot of this attention is the growing increase in the investment community. We've never before seen this large a group of investors come together on a common theme, and that common theme is most definitely transparency. And while some of these things relate to climate change and greenhouse gas emissions, all of them relate to the desire for more information from the companies in which they invest. And as these institutions have grown up rapidly and looked not only at the public markets and public equity markets, they're also developing in some unique and different ways. So if you're a publicly listed company, it's worth looking at the signatories here and matching them up and seeing who is actually some of your biggest investors and whether or not they're involved in these groups. Marissa, next slide. As this evolves, we also see that a lot of people talk about how this evolved from the socially responsible investment community. And as you see sliding in here on the lower left are some of the firms that we know quite well from the socially responsible investment community who've been at this for quite a long time. And in fact, because of a lot of their work, it's raised the attention of the public pension system. And so you see not only up in the right-hand corner a number of cities and states that are involved in this now as asset owners, but you see also university endowment funds like Harvard who are thinking about their responsibility as investors on these topics of transparency, environmental, social, and governance performance. Because of that demand from the asset owners, a growing number of asset managers are stepping in. And as you see here from the center swath of companies, these are very, very large, well-known mainstream institutions who are now managing money through this lens of sustainability. Marissa, next slide. As this evolves and this market evolves rather dynamically, it's also evolving in a parallel universe to a number of other things. There are a wide range of sustainability frameworks and guidelines out there right now. You see here on the left side of the screen are some of the initiatives that are out there and the standards that are out there that are helping companies think about how to measure, manage, and disclose this information. As more and more information comes out in the marketplace, we're seeing this trend towards environment, social, and governance research. So in the center of your screen, you see a number of these research firms that are doing some very elaborate analysis of entire indices across the world. So if you're in the S&P 500 or the Russell 1000 or the Russell 3000 or the MSCI World, you are being looked at now through this lens of ESG performance. And as performance goes, on the far right, you have a wide range of awards and designations that are popping out now. Everyone likes to be the most admired company, and even Fortune's Most Admired has a CSR component to its scoring system. But these are just a few of the other rankings and ratings and scoring systems that are out there in this space. Next slide, Marissa. As this continues to grow and expand, we see an increasing number of companies do more and more when it comes to voluntarily reporting on their sustainability performance. And many of the companies that you see here or the brands that you see here are doing this according to the Global Reporting Initiative. Some of them are actually moving into something called integrated reporting. Some of them, many of them have been involved in SASB's work. And so quite a number of these institutions are very active. And you see a wide range of public and private firms, small professional services firms like Brown Flynn. We even do our own sustainability report using the GRI guidelines. But something to be aware of is that up in the upper right-hand corner are some very large institutions that are not publicly traded entities. They are going through their own materiality analysis, identifying the most important issues for them, but they're also then obviously looking at their own supply chain, because a big part of anyone's footprint is made up of its supply chain. So you'll see here the United States Postal Service, the U.S. Army, the Department of Ecology is a state environment agency here in the U.S. The City of Chicago, even the London Olympics is doing a sustainability report, and the IOC is very much behind this because they serve very big, they have a very big footprint in this space. Marissa, next slide. As this unravels even more, again, it's not just publicly traded companies. We're seeing very large multinationals now drive sustainability into their supply chain. Some are doing this through surveys. Some are doing this through scorecard development. Some are doing even trainings. And we're going to hear some really interesting stories from Microsoft about how they're doing this. But think about the size of the supply chains and how this echoes throughout the entire global economy. And as mentioned earlier, some European Union-related developments are going to certainly drive even more of this kind of reporting. Next slide, Marissa. And so when we look at this dynamic and it unfolds across the world, of course, regulatory bodies and self-regulated organizations like stock exchanges are getting more involved, and we're going to be able to have this chance to talk to Evan in more detail about that. We also see the European Commission doing things around this topic of reporting and transparency on material ESG issues. As this unfolds, it's going to affect companies all across the world who want to do business with European companies or in Europe. And in here in the U.S., the U.S. public agencies in Washington, D.C. are doing a lot when it comes to sustainability. The White House executive order is driving all of our federal agencies to look at their own footprint across not only environmental issues, but social issues too. There's always a procurement policy within federal agencies and other state and public agencies around minority-owned businesses. That's a social component. The U.S. General Services Administration, the largest procurement arm in the world, is looking at these issues itself, not only looking at its own footprint, but as a procurement body for the federal government, is starting to analyze its own supply chain. And as this rolls out, even professional associations like the American Institute of Certified Public Accountants is getting more involved in this discussion. So with that, that kind of lays the setting for today's conversation. If you can go to the next slide, Marissa, so that all of you can see who's on the call today and how we're going to play this out. We've got about 45 minutes left. As I mentioned earlier, you can write into us directly. You should see my name on the interface, or feel free to email me if you like. But I'm going to first go back to Evan and talk about the global marketplace and what's happening across the world with big stock exchanges. Evan, you've been at these meetings. You were giving us a little bit of a debrief beforehand. Give us a little bit of the history. When did the stock exchanges first get together on these issues and start talking about it? And give us a little bit more update on your most recent meeting and where you think this is going.
Thanks, Mike. Well, some stock exchanges have been involved in this for quite some time. We have, examples in South Africa and Brazil and other places in the world where, independent of any kind of consensus in a global body like the WFE, they've just been driving sustainable practices into their issuer universe because they thought it was the right thing to do, because they thought it gave them the kinds of insights into company health and strategy that they needed. So they're to be saluted for doing that. But in terms of global cooperation, the United Nations Sustainable Stock Exchange Initiative started 4 years ago at the Rio Plus 20 conference. We were one of the original founding signers of that effort. There are about 15 exchanges involved now. The WFE, which is the World Federation of Exchanges, for those of you who don't know, it's the only trade association that connects all the stock exchanges in the world. Just about every stock exchange you've ever heard of in the world is a member of that, with one very notable outlier, and that's the London Stock Exchange. But just about every other stock exchange in the world is a member of the WFE. And then in late 2013, early 2014, they formed, at our urging, the Sustainability Working Group. Nasdaq chairs that group. South Africa is the vice chair. And we have 20 of the 63 exchanges in the WFE participating in that group. So what we've done throughout this year is have a series of meetings in person and on the phone, trying to drive towards a global sense of consensus when it comes to the materiality of ESG metrics. And I think that different drivers have worked for different markets. You know, you have emerging markets in Asia where they sustainability and listing guidance around sustainability is just part of the market from the get-go. Then you have these very mature markets, NYSE and Nasdaq, that are competing for listings, where you probably are not going to jump into a listing rule because you don't want to do anything that's going to jeopardize listings, but you do want to try and drive this thinking and this business process into the companies that list on your exchange, because it gives you a better indication of who's going to be there next year and 10 years from now. So in some cases, the risk side of the argument has won exchanges over. Regulatory pressures, investor engagement. In some cases, the reward side has won people over, eliminating inefficiency, like we're going to learn about today, in resources, supply chain, and vendor management, procurement, even things like data center infrastructure management. And we're open to both of those levers because we think they both get to the right place.
Good points, Evan. And so on that, I mean, you've named a number of initiatives that are popping up out there, and certainly stock exchanges that are members of these initiatives will be seen as leaders. But are there unusual or surprising developments? You mentioned South Africa, you know, as a co-chair. Why are they doing this, and what are they doing? And I've heard a lot about Brazil as well. Can you tell us a little bit more about some of the leadership examples from stock exchanges?
Well, they have done it. There's a couple of peculiar circumstances in those markets that have enabled them to be really progressive on this issue. They have a high degree of government intervention, especially in South Africa, where the mandate came down from the government to basically implement the King Code, which meant now an integrated report. If you list on the Johannesburg Stock Exchange, you deliver an integrated report about your company, and that applies to everybody that lists there. It's a very high standard of transparency. I don't know if you're all familiar with what an integrated report is, but it, to me, represents a very mature understanding of sustainability metrics and telling your corporate story in a way that integrates a lot of different narrative points of view. It also is a transformational thing for corporate culture, because the inefficiency piece and getting rid of inefficiency, everybody buys into that argument, but the transparent culture piece is much more difficult to accomplish. It requires you really to disclose both strengths and weaknesses, which is something that companies generally have not done. So in places like South Africa, they have made that that philosophical step towards the good outweighs the bad in talking about strengths and weaknesses and being very transparent. And then I think that in a lot of ways, exchanges have been led by the most progressive companies on their exchange. You know, we have terrific examples at Nasdaq that we learn from, at Microsoft, at Intel, at Cisco, at Starbucks. A number of companies that list on Nasdaq have integrated this idea into their, not only their supply chain, but the way that they promote and organize their leadership, the way that they report up to the board, the way that they interact and engage with investors who care deeply about this. So we are not only learning from other exchanges, we're learning from the listed companies that do this well.
That's good information, Evan. So, I mean, on that, I understand Brazil's a little bit further along in a slightly different way with something called Report or Explain, and they're actually even training issuers on this topic. Do you know much about that, or when you meet with them, do you talk about what they're doing?
Yeah, Comply or Explain is really just you put out a framework of metrics that you expect companies to be able to disclose, and they either disclose the metric or they have to provide a compelling rationale for why they're not disclosing it. In some cases, there is a rationale. It's competitive information. It is material to some kind of legal action, or it's something that they're not comfortable or confident in the auditability of the metric. There's a number of reasons why there could be a legitimate reason for not disclosing, but it's basically giving companies two options. One is, disclose this metric. The other one is tell us why you can't disclose it. And I think that it's an interesting paradigm as we move towards this global sense of consensus between exchanges about these metrics. There very well may be a Comply or Explain aspect to what we recommend, because it's fairly persuasive. Either what is not acceptable, it seems to be so far in these discussions, is companies just not understanding or knowing what these metrics are. If you're running your business today and you don't have a firm grip on how your supply chain works, or the resource picture long-term for your company, or how energy costs, going up by a third by 2030 are going to affect your operation, that's just bad management. So if you don't disclose it, that's one thing, but not having the information in hand to make decisions is an entirely different indicator. And so we want to make sure that companies are at least looking at these kinds of metrics, because we know that large institutional investors are looking at these kinds of metrics, exactly like Mike outlined in the opening. We know that this is no longer a niche SRI issue. This is now a mainstream investor issue, and not having this information in hand and not being able to act on it is going to drive investment dollars elsewhere. 5 of the top 10 investors right now in our own company are PRI signatories. So this is a conversation and an engagement that we have very personally with the people who invest in our company, and I suspect that more and more companies will be having the same conversation.
Interesting. So, and you yourself, as Nasdaq, have a footprint. You're working on your own sustainability efforts. Have you done your own report?
We have. We did GRI level report in 2012. Our 2013 report is currently parked in review, but we hope to have that done by calendar year end. And we've managed to do all of this for very little money and with not much organizational resources allocated towards it. Next year we have a more substantive project underway to engage and promote these efforts. But the idea behind our project for the last few years is do it as cheaply and efficiently and quickly as we could. And we've had dozens of conversations with NASDAQ-listed issuers about how we did what we did, because we want to kind of take some of the steam out of the argument that it costs too much money or it takes too much time, because we think that you can get to a fairly basic level of compliance and disclosure without using up either of those resources.
That's a good point. It's something that comes up a lot in conversations with companies, and there's constant need for chief sustainability officers or anybody working in this space to make the internal business case. As you start to unpack this story and the work that goes on inside of a company, the job does get bigger. And so it's interesting that we have not only a NASDAQ issuer here on the call with you, but also probably, I suspect, you operate on Microsoft products, so a supplier to NASDAQ as well.
Absolutely.
I'd like to turn to Steve now to talk a little bit about this. And Steve, we've gone through some questions ahead of time about what you might want to touch on. But given what you've heard from Evan and your own expertise in this background, in this work, and the fact that you work on Microsoft's own report, feel free to embellish, your storyline here. But give the audience a sense of, how Microsoft's efforts have evolved around sustainability, and particularly when it comes to transparency.
Sure, and let me just step back and thank Evan and NASDAQ for the opportunity to be here, and just looking at the diversity of people who registered for the call, just a terrific set of people who are muted, so unable to share their experiences, but it really is an honor to be part of this community that's interested in these topics and sharing our experience with you today. And that is our experience. I think that we've been at this for a long time, and I'll talk a little bit about that, but I don't want to pretend that we've solved all the issues, or that we are, we're sort of at the end state of where we want to be in terms of our reporting. It's a constant journey and evolution and learning process, and so I'm looking forward to sharing some of our experiences and lessons learned, but certainly with the understanding that we still have a lot to learn ourselves from stakeholders and other companies and others, certainly as NASDAQ, as well as they look at how this is relevant to companies listed on their exchange. But when I do think about citizenship reporting at Microsoft, it has been an evolution. You can see the most recent form of that evolution is just posted online. We just posted our FY14 citizenship report. It comes in at a nice, concise 60 pages, and that's available at microsoft.com/citizenshipreport. When I look at the set of reports that are set up in my office, they stretch back to 1997, when our reports really focused on philanthropy and the impact of our philanthropy. And somewhere around 2003, they have evolved into what would look like a more holistic citizenship or CSR, sustainability report. And through the years since then, we've reported consistently on an annual basis, but what the reports have looked like have shifted quite a bit as well. We went for some very big reports, got some feedback from internal and external stakeholders that they were a bit overwhelmed by that information. We narrowed down to a few years of some very thin reports. It's probably generous to even call them reports, and then felt we'd overcorrected, and certainly with growing stakeholder interest and questions, we've evolved to what I think is a fairly traditional sustainability report. We've based it on the Global Reporting Initiative guidelines. We've now transitioned our latest report to the G4 guidelines from the G3.1, and we do provide an online index of all the G4 indicators, and that's been a useful framework for us, and that may be something that we get into a bit more, Mike, in discussion. But so it's certainly been an evolution, and it hasn't necessarily been a linear progression through all those years, but certainly we see the demand for this type of information and the value of the reporting, is clearer now than it's certainly ever been in that history since 1997.
So with that, Steve, the topic of materiality comes up a lot. I mean, even Evan mentioned it too. How does a company the size of Microsoft go through identifying what are material topics?
Sure, great question. And it is, it's a relevant one to us because Microsoft is so diverse. I mean, we're a software company, we're a hardware company with Xbox and Surface and other hardware. We're an internet company. And so when we do look to, I think that for those who are a little bit familiar with the GRI, the Global Reporting Initiative, G4 guidelines, there's a little bit of a compromise in there where, and I'm paraphrasing here, but essentially G4 is saying, we will suggest that you report on fewer topics more deeply, report on what's material to you. But when we look across the range of topics, and Microsoft is a global company doing business in 150+ countries around the world in so many kinds of business, it's hard to drop too many topics, off the table. And so we do, we certainly look to other external standards in terms of, the SASB guidelines are now one universe of suggested metrics, certainly what other companies report. And what we're doing ourselves. I mean, we have our own internal management systems, and issues that are most material to us, we tend to, have the most sophisticated or biggest teams working on internally. So mapping what we're doing internally has also been a good proxy for then what we need to share externally.
So with that, you are probably also familiar with integrated reporting and this concept. If something is identified as material within the work that you're doing, Steve, should it not be in the annual financial report? And how does one go about getting it over there? And are you having those kinds of conversations?
We are really lucky. We have a great relationship with our corporate governance team and with our investor relations team, and I know that's not always the case at every company, but we really do have a great partnership. I would say that the issue of materiality is still an interesting and challenging one because there are different communities using the same word with slightly different definitions. And there are charts out there that kind of will compare even how, some of the different reporting standards define materiality differently. And there has been, I think, within the sustainability field, a little sense that materiality may have a slightly more encompassing universe than just financial materiality. So issues that are of significant importance to key stakeholders, even if they wouldn't rise to the level of, the test of financial materiality, are issues that we definitely want to report in our sustainability reporting. We have a small discussion of corporate citizenship in our annual report, in our 10K, where we reference issues like climate change and climate risk and opportunities, and also in our proxy statement. But I wouldn't say that Microsoft is probably the leading example of integrated reporting. I think there's a number of companies there that are ahead of us. I think that we have settled into a sustainability reporting rhythm. We release the report on the same day as the annual report, and we cross-promote them to all the same audiences. So our investor relations team is pushing out the citizenship sustainability report at the same time they're pushing out the annual report. But for us, that's where we've landed now, and we'll watch where things evolve, and I'm sure there will continue to be developments in that area.
So Tim, I'm not leaving you out, but I do have a couple more things for Steve before we turn to you. So Steve, on that note then, the question came in about auditability and assurance. What kind of discussions are you having internally about assurance on certain metrics, and where do you see that going?
Yep, we had, for the first time in our process, or one of the first times, I should say, last year our internal audit team audited the entire citizenship reporting process, and that was useful exercise in diligence for everyone. We take the information that we put out publicly very seriously, and so as do our colleagues. So we'd be working hard to put out the right, correct information, but knowing that there is an auditor who's looking at a paper trail does also ensure that people provide all the right information in an organized, robust way that you can go back to and look at year over year and really understand to be able to compare across years. To date, we haven't. We do have external assurance of our carbon footprint and energy metrics that we report through the Carbon Disclosure Project. We haven't done external assurance of the citizenship report, and I have to say we haven't seen the stakeholder demands for that. I think sitting in my seat, it feels more like a nice to have than a must have. And when we think about, again, to Evan's point about trying to to keep the cost of reporting as efficient as possible, we haven't yet seen sort of the ROI in making that investment. But if that changes, if major customers begin to demand it, or Nasdaq or others, we certainly keep our ear to the ground about where things are going.
Well, that brings up an interesting point, because as we move into this voluntary space, and it's great to see all this voluntary disclosure, Evan, I'd ask you, what do you think how is this going to play out? I mean, ultimately, it's great to have these qualitative statements about what a company's planning to do and is doing. It's great to see some numbers pop up. It's great to see some assurance of some of those numbers. But, there's a prove it factor here. Would Nasdaq ask Microsoft eventually to prove it? And Tim, when we get to you, is Microsoft asking its suppliers to prove it? Evan?
Well, I think it has to do with different levels of sophistication and maturity in your effort. I think that there's such a dearth of good data right now. I think that there are a lot of companies who don't report anything or report poorly, that I think you're dealing with at what point do you start to assure or audit the data once it becomes prevalent in the marketplace. We think that the markets will naturally disseminate and incentivize the right tools when it comes to data, and I think that in some cases, and in a lot of cases, they're getting such scrutiny from investors and other places that bad data will out. But I still think we're at the point in the development of this effort where we need to get more data from more companies into the mix before we start to mandate auditability or verifiable information. We're going to get there eventually, but you have to start with a good mix of participation before you can start to scrutinize what you do have.
Thanks for that, Evan. So Steve, I'll come back to you with a couple of other questions later, but I want to turn to Tim, because this kind of ripple down effect is something that is certainly playing out across the marketplace. We see major institutions like the U.S. Army assessing its own supply chain, and the U.S. Postal Service, the federal government itself, looking at its supply chain. Tell us a little bit about your role there at Microsoft, Tim, and what responsible sourcing really means.
Thanks, Mike, and thanks, Evan, as well, for the opportunity to share some of the things that we're working on. And I would echo Steve's comment around, this is a journey, and we've made some progress, and there's some things we're doing that is great to share, but there's lots of opportunities to continue to advance. For us, and just for clarity, Microsoft really has two groups in charge of responsible sourcing. There's a group, as Steve mentioned, that Microsoft's a big company, and we've got both hardware as well as non-hardware suppliers, and so there's a group focused on the hardware suppliers, and then I'm focused on the non-hardware or non-manufacturing, if you will. So really the scope includes what we call indirect suppliers. It's things like IT support, consulting, BPO services, even real estate facilities, those type of services, or even products that are provided to Microsoft. And in our portfolio, we've got about 25,000 roughly suppliers that we have direct spend with. That's under my responsibility. And these suppliers are actually in dozens of industries, so it would cover lots of different spaces, or lots of different types of companies, if you will. So our journey has been, as Steve mentioned, Microsoft's been in citizenship for quite some time, and our journey sort of reflects that with regard to our supply chain and especially our indirect supply chain. It really started, I think, more formally about 10 years ago, where the Electronic Industry Citizenship Coalition was formed. Their acronym is the AICC. They were formed to establish a set of standards, a code of conduct for suppliers. Its origins really were in the hardware space, but the code of conduct is something that can be it's relevant or important to set the baseline expectations for suppliers in every industry. And so Microsoft, I think in 2004 timeframe, has that as a contractual requirement for all of our suppliers providing services back to Microsoft. And so the journey that we've had since 2004 really is twofold. There's on the one side there's the compliance activities, and then also it's sort of true to our mission as being a sort of philanthropic type of company. We also engage our suppliers with more partnership type things. We started off with doing what I'll label as proprietary self-assessments, scorecards, and on-site assessments with some of the categories that we work with. These were all done to test the supplier's conformance or compliance to the supplier code of conduct. And then in some categories as well, we put in things like an RFP language that actually would promote suppliers above the code of conduct compliance, but rewarding their sustainability progress. And we also created a program, one specific program with what was aligned to our citizenship efforts to help bridge the digital divide. And I think, with some of these efforts, we learned a couple things. One is the balance of the supply chain. When you have, as many suppliers as we have to provide services to actually get our goods and services to market, there's a couple things. One is trying to be consistent and uniform in what those expectations are, and also providing the diversity for suppliers to really express where they're at. There's a spectrum of maturity across any industry, across any companies, or companies across their peers. And so it's allowing to make sure we have a firm baseline and being uniform and very dogmatic on what that baseline is for any company to do work for us, but then allowing companies across that spectrum to engage with Microsoft and really to showcase what they're good at. And I think it's this working back and forth as far as lining up what are those uniform global requirements that are our baseline, and then building out what structured opportunities for suppliers to go beyond the baseline.
Thanks, Tim. So with that, you're looking around the world at lots of different suppliers. You're looking around the world at a lot of suppliers that relate to your competitors. What do you feel is the common ground with all of this? Are you AICC is one place where you're working with your competitors and peers. Are there other places where you're finding ways to work together so that one single supplier is not being inundated by a bunch of things from 12 different customers?
Yeah, it's a great question. So one of the things we've done, and this is there's things I've done sort of at different stages, but last year was the first year we did a global risk assessment. We actually engaged Maplecroft, who helped us pull together a risk assessment. So now we can look across every one of our suppliers, our 20,000 plus suppliers, and we have unique risk scores covering their ethical, social, and environmental risk, as well as opportunities that we have with those suppliers. And so it really provides a really rich, deep intelligence on our supply base that we hadn't had before. And then also last year, I think, and this is still in partnership with the AICC, but we developed the first industry standard self-assessment questionnaire. And it's essentially what it is. It's a tool for suppliers to share back their sustainability performance, their actual adherence to the supplier code of conduct, but ultimately not just for Microsoft, but for all the electronic companies that are members of the AICC. And that's been really important. It's important for suppliers to now not to have proprietary, unique self-assessments that they fill out, but this is something that, they can consistently share back with other companies in the tech industry, as well as share their performance with other stakeholders. But a few more, Mike, what we work with. We do embrace the GRI. Steve mentioned how we do it as a company. We've also looked at making this a contractual requirement for our strategic call center suppliers, and so a few years back we put GRI and GRI reporting as a contractual requirements for our suppliers. We also have for our indirect strategic suppliers a recurring quarterly scorecard where they show sort of operationally how they're aligning to our code of conduct, and we've cross-footed those to the GRI, so the work they do to report for us is something that they can actually take and report on up through the GRI as well. In addition to GRI, we do engage the Carbon Disclosure Project, and so for the last four years we've been in the Supply Chain Information Report. The last 3 years in our technology as well as BPO suppliers have responded to this report, and just this year we've extended it to our premier suppliers at Microsoft. And we're working through right now the reporting results to analyze their emissions and climate change impact of our premier suppliers. And then one last one I want to bring up that we've just launched this year as well. It's with the Rockefeller Foundation. They developed this global standard around what's called impact employment metrics to support an initiative that they're driving that we're participating in called impact sourcing. Impact sourcing is this intentional engagement of more vulnerable or disadvantaged but capable employees, and the impact employment metrics allow companies to share their performance, knocking down barriers to employment and actually providing a metric story driven around how they're empowering their workers. And we've launched this with about 10 companies so far this year in our indirect supply chain. So I think our key stakeholders to try to bring this uniformity to what we're driving it really is the AICC, the GRI, the CDP, and the Rockefeller Foundation. Those are all key stakeholders we have to help our suppliers to tell their stories, not only back to Microsoft, but to all the different stakeholders that they have.
That's really amazing, Tim. And it's amazing how much is going on, just within and around Microsoft on this topic. I mean, imagine there's a lot of people on this call that are new to this subject matter and are probably feeling a little bit overwhelmed by all of the things that can be done, even this down to the impact sourcing idea is something very, very new. Evan, when you're kind of thinking about these things, you talk about the WFE as an association of members. We heard Tim talk about the AICC as an association of professionals in the electronics industry. There are lots of different industry groups and professional associations out there. How do you give kind of a view of this landscape in the sense from a Nasdaq point of view? Are there certain ones that you really admire and that you put forward to help your issuers know how to proceed?
Yeah, in fact, I think the AICC is right at the top of the list. We've had several interactions with them. A lot of NASDAQ-listed companies are involved with them, and these are companies that are highly competitive in their business practices, and yet they find room to collaborate through this coalition on things that are of shared interest. And I don't think it's I don't want to underestimate the value of an organization like that in bringing competitive companies together for the greater good. I think that it's no real surprise that if you look at the companies that are listed in the membership of the AICC, they all outcompete on sustainability in general. Not only does the electronics industry have a pretty good track record when it comes to integrating sustainable principles and disclosing sustainable metrics, but the fact that they have this forum that is sort of for them, by them, that gives them a unified voice, I think really, really helps. And it's sort of the same model that we're adopting for the stock exchanges. The stock exchanges want a similar kind of forum where it is exchanges talking to exchanges about best practices and what makes the most sense for us, which trickles down into our supply chain, which in some ways is listed companies and issuers and financial products and indexes and things like that. So I think that every industry, a lot of industries have a similar group. I think that it's hard to find one that is as progressive and has the history of the AICC. I think they're a tremendously important advocate for sustainability in that industry and for U.S. companies in general.
Yeah, I would highly agree. I mean, it's been great to see AICC do what it's been doing in this space. We know, we work with the Automotive Industry Action Group, this entire supply chain of the automotive industry that's all trying to figure this out together too, and the industry group itself is trying to make sure that all of its members are not having to face a bunch of different things out there. And so the standardization amongst industry groups is really fascinating in the recent development. Those of you on the phone, if many of your companies are already members of things, it's worth looking at your professional associations and your industry associations and thinking about how you can tap into those resources to help you understand these topics. Steve, on kind of that note, you work in this space and you've been at it for a long time. There's a bit of a maze out there for people to deal with, all these different standards to use. I got a question came in about ISO 26000 and how that relates to the various standards out there. Can you touch on this lay of the land and thinking of one of the audience members that is probably brand new to this, how do you make sense of it?
Thanks, Mike. That hits a theme that I was just talking about, and as I looked at time, I wanted to make sure to get in for people. Two themes, essentially, from what we've learned. And the themes are, one, over time, every time we've thought about disclosing more, there's been caution and concern and some lawyers who are involved, and every time it's worked out well. And I think we finally built up some of the credibility that every time it gets easier. But, if you look back at some of the sensitive information we've started to disclose over the years, our political contributions and even, some of our trade association lobbying, we name our top 100 manufacturing partners for our hardware, which represents about 97% of our spending, with concern about customer privacy and government spying. We report on law enforcement requests for customer information. We actually sued the federal government to be able to share some information about the national security orders we get for customer information as well, which we hadn't been allowed to disclose. We've enhanced the diversity data that we reported this fall, and our CEO just announced that we'll release our full EEO-1 form by the end of the year. And every single time there's been concerns in advance about taking that next step, and every time we've really been well served by it, and we find the conversation really moves. It moves to the next company. The conversation does not tend to be around what we've disclosed as much as, oh, who else still needs to disclose? So I offered that as one word of comfort from our experience. And the other is don't let the perfect be the enemy of the good. There are a number of standards out there. There's lots of metrics out there. But I think that particularly for companies that are smaller, that are starting out, it's absolutely fine to start somewhere, anywhere, and think about what's most relevant for some of the stakeholders you care most about, whether those are your employees, whether those are key customers or communities or investors or others. But I would not look at, let's say, Microsoft's report and feel our first report needs to look like this. I think it's always a journey that you learn on. I think most stakeholders are far more forgiving efforts than people might fear they would be. And so that would be my encouragement, would be that where there's real concern about disclosure, we've always found it to be helpful, and that you don't have to have it all perfect and exactly map to all of the standards the first time out of the gate, or even the last time out of the gate. I mean, again, we provide an index to the GRI G4 indicators, but that doesn't mean that we've answered all of them, or certainly answered all the SASB indicators, or mapped to the ISO 26000 reporting standards either. I think to look at it, and then I will stop because I've gone on for some time, but I do think look at all those standards as a useful pool to draw from, pick what makes sense to you and your organization based on them, and start somewhere and see what feedback you get from stakeholders, and improve a little bit each year.
You brought up something there. Do investors really care? Are you getting questions?
They do. So two quick things on this, and then I'll make sure that Evan and Tim have time as well. But we talked about our top 25 institutional investors, so the really big ones, the really big pension funds, or the BlackRocks, Fidelities, Vanguards. We're talking to their governance and proxy voting teams. We do that twice a year, and they are. I sit on those calls, and they're aware and they're appreciative that we do have robust reporting. To date, I wouldn't say that there's been incredibly detailed questions about a particular footnote on page 18. I think it's tended to be a little more of an on-off metric, a sense that, hey, this looks like some solid reporting, so there's good management of these issues. But the second point and benefit to reporting, I would say, is, for us at least, it eliminates so many fire drills. There's always that Friday before a holiday weekend at 4:30 when some salesperson says, hey, I'm about to close this deal, but the customer wants all this information. And what used to be, just a huge scramble and fire drill has become as easy as just telling them the URL to the citizenship report and we're set. And so it really is nice to have your language approved by legal and PR and everyone else, and all be on the same page, because the random left field questions always, they always come late in the day before a holiday.
Yeah. Well, it's funny because you used to be on the other side of that, and you probably caused that havoc for a few companies when you used to do the SRI work. Karma,
I got to get this question out before I go on vacation.
So, Evan, over to you with this. You got a lot of people listening in today. You've got some, some desires to move this kind of education forward within the platform of Nasdaq. What kind of guidance? I mean, you've heard some new stuff probably from Microsoft even today. How would you summarize this and give guidance to those companies on the call that are just scratching their head, going, I don't know how I'm ever going to tackle this? Are there some approaches, some standards, some guidelines, short, quick steps? Back to the title of this, what are the systems out there that people should be turning to?
Well, I mean, first and foremost, I think learn from your peers. We can come in as an educator and present information and offer research, but I've told this to Mike before, that the most effective kind of interventions we've had with issuers are putting a CEO and a CEO together. Learn from your peers. Learn from the people who do this well, because if there's a company out there that you admire that is doing this well, believe me, they're not doing it to waste time or money or to placate an advocacy group or to satisfy a niche audience. They're doing it because it makes good sense. And I think that there are numerous examples in the Nasdaq-listed universe and throughout the world of companies that are doing this well. In terms of frameworks and where to start, it is a bit of an alphabet soup. I'm completely sympathetic because we're in the same boat. But I think that the point that Tim made recently is a good one. Don't think that it has to be perfect. Find a standard. Get to the metrics that you think are the most material for your business, meaning they offer the most amount of insight for an outside person to understand how you operate and how you're planning your business, and disclose those, or find a way to disclose something related to that. You don't have to do 100% of the GRI or even the SASB protocol in order to start the process and to get better each year. That's certainly the approach that we've taken. And I think that companies are always balancing, like stock exchanges are, the needs on the risk side or the regulation side with the entrepreneurial spirit that began that company. You know, you want to be aggressive, you want to move forward, you want to compete and win in your marketplace, but you know, you have a greater number of stakeholders, a more engaged set of stakeholders now than ever before. And you know, as exchanges, we want to make sure that not only the entrepreneurial spirit lives on and those companies are able to compete and win, but without regulatory control of some kind, without some kind of disclosure paradigm that is required, you know, you could be emboldening bad leaders to grow into bad corporate citizens, which inevitably affects everybody. So find the balance within your own company, the risk and reward side, and disclose what you think you can for now, and then try to expand. As Microsoft has mentioned, you know, all of the roadblocks will fall away. The things that are initially rejected will eventually be turned into yeses. And I'm like them. I have not found any negatives so far in what we've progressed into, and hopefully that will be the case well into the future.
Hello, can you hear me?
Yeah.
Sorry, I just somehow got dropped. So I missed the last part of that, Evan, but I'm sure it was
It was pithy and candid, but you know.
So Tim, turning to you, hopefully you're still there, and it was just my line.
Still here.
Lots of companies out there that are getting to this level of a stakeholder or supply chain engagement. I mean, it can be a massive undertaking. If you have someone like a Walmart, tens of thousands, if not hundreds of thousands of potential suppliers, a Microsoft, thousands of suppliers. How does one get started down that path? I mean, it seems like there's a bit of a trend towards, I'm going to send out a questionnaire to all of my suppliers, and then suddenly you've got responses, hopefully, from all of them. Now you're a data management guru because you've got 10,000 responses have come back. Or people doing the scorecard thing with their industry groups. Some companies actually going out and training up suppliers. What do you think? You know, given your experiences, how do you get into this in an efficient way?
From the buyer side and from sort of a procurement compliance lens, really it is that risk assessment that really makes us make intelligent distinctions on how, you know, what suppliers we would focus on with what type of activity we would do. So having that data-driven intelligence is really key for us. And I think that the second thing is, you know, and I want to sort of underscore, I think, both what Evan and what Steve said around sort of wading through, you know, with the challenge that I face is because I work with all these different suppliers with all these different industries, is there are, you know, there's a whole host of different standards that are out there that are that may or may not help us understand the supplier's, you know, performance with regard to sustainability. And so, you know, one of the key things, you know, we've done some initial, we have a stakeholder group, for example, we set up with our top BPO suppliers. We meet quarterly, and we actually define sort of the future together. So we work on what the requirements are, what the standards are, and sort of as a group, as the suppliers themselves, we identify some of those key things that we want to tackle. And I've even had companies approach me, so suppliers approach me. One supplier actually approached me last May, a promotional material supplier, sharing out their competitive advantage around sustainability. And that's led to a whole series of exchanges where we're now working and consulting across all the different promotional suppliers, identifying all the different standards, and really going to do a crosswalk, working on a crosswalk with our own requirements and actually with the AICC to see if it fulfills what, you know, largely what our code of conduct is and what the compliance activities we have around that code of conduct. So my exhortation is just what Steve said is, you know, get involved. If you're a supplier with a company, I would go start to have conversations. You can actually help change or influence the kind of things that you could be strong at, and influence what those expectations are for the other suppliers. And I'll stop. I know we're at time.
No, that's a very good point. I have something that strongly suggests a lot of companies seem to sit in a little vacuum, and they don't want to talk to the ESG research firms, but those research firms actually want to hear from companies. Some companies are worried about talking to their biggest customers, but there's actually a lot of opportunity for collaboration. And then again, you know, your industry associations are probably trying to figure these things out too. So talking to your industry and finding out who's the member of your biggest industry association and going with that person. Well, one last note before we cut this. I didn't get to everyone's questions. We'll export those, share them with my colleagues who are on the call today, and try to respond to those of you that had questions. We are recording this, and we will finalize the recording, and the slides will be available to all of you who are on today, as well as registrants who weren't able to make it. We do hope to do something more like this with Evan and Microsoft at maybe some different forums, so please stay in touch and keep us posted if you want to hear about future webinars like this. And with that, I'd love to just thank Evan, Steve, and Tim, and Marissa for helping out today. But you know, to you gentlemen, really appreciate your candidness today and for helping us get this information out to the public who's interested. Thank you, guys.
Thanks, Mike.
Thank you, Mike.
Thanks, everyone.
Thank you.